our today's session, our today's session will be taken by CAPR Ramesh sir, and it's uh, regarding PR Ramesh sir. To be very honest with you all, PR Ramesh sir is my idol. PR Ramesh sir was chairman in Deloitte India, also served the board of Deloitte Global as well as Deloitte Asia Pacific. And PR Ramesh sir is having a vast experience of 40 years. And PR Ramesh sir again part of the various regulatory body you can name, and you will find like various regulatory body like SEBI, RBI, IRDA, and so on. Similarly, sir is also part of the various industrial body you can name, and you will find some of them are like CII, FICCI, and so on. Sir is also part of the Institute of Chartered Accountants of India and various committees and boards. I would like to first invite CA Prakash Sharma sir, who is a head of Center of Excellence and our CCN. Over to you, Prakash sir.
Thank you, Sunil. Thank you. Respected PR Ramesh Sahab, Sunil said that my ideal, but believe it, Sunil, I can confess in front of all my CA members that if anything good I will be carrying with me after leaving Central Council, that I met some of the few dignitaries which I can never forget in my life. So simple, so knowledgeable, so positive thinking. It is one of the PR Ramesh sir. A wonderful person, wonderful, knowledgeable person, and such a down-to-earth person. You can never find that he had been a chairman of Deloitte of Audit Division. When I met first time, so I was thinking, because I don't think it's Sunil otherwise, because you are also one of the big four. So you have people have got some different style. But when I met Ramesh sir, from nowhere I could make out that he is the chairman of Audit Board of Deloitte. And let me share with you people, friends, from last more than 20 years. Ramesh sir is giving his not less than 20 to 25 days to our institute for various services. That also, all those services are free of cost. And you can understand the importance of his presence in our institute for so many very, very important aspects. So I'm really, really thankful to Ramesh sir, and I expect that Ramesh sir has retired last year only from Deloitte, but I know a person like Ramesh sir will never sit idle in the house. So I was just talking to him. He was sharing that he's on some of the boards, but now at least a person like me will be disturbing you, Ramesh sir, time and again for having knowledge from you, sir. So I don't organize any conference in Jaipur without your presence. So, things are exactly like this. Friends, today we are having a moderator, that is Sunil Sharma. He's my own student and he's heading KPMG Jaipur office. So I'm very lucky that my students are on very good position and doing very good work. Sunil is also one of them who is working very hard and giving very good social services for our profession also. So we are having today both the learned people with us. Friends, on technical side, I will not speak much because Ramesh Saab is there. The only thing I will like to share that the way MCA is working now, in the last year, in the month of March, they came out on the public platform. They asked for the advice that how auditors should be appointed, what should be the role, for so many things. That way, MCA never used to do before that. Last year, in the month of September, we saw Reserve Bank of India came in the month of September only for comprehensive LFAR report. But now you'll have to prepare like this. That way, even NAFRA is coming. Even all the controlling institutes have become very active these days. But the only my pain is that they are not taking advice of our institute the way they should take. Even if I talk about NAFRA, there is a very clear understanding in the board. There will be 3 members from our institute. But whatever they are doing, whatever they are deciding, they are not calling even our members for their any major decisions. So these are some very important aspect which I feel that our institute level we should involve. And in last meeting of council, that is on 29th, 30th, and 1st of July, we have taken a strict action, a strong action, first time, that now we'll oppose these things strongly if they are not going to listen. At least whatever government has decided, they should accept that, and they should at least take our views, that what views our institute are having. That is very, very important. So they are not going like that. I will not take much of the time, and request Sunil sir to introduce PR Ramesh sir. And friends, let me share with you that before retiring from Deloitte, the balance sheet of Infosys was signed by PR Ramesh sir only. There were only 2-3 big units for which big organization for which Mr. Ramesh sir used to sign. It was Infosys was one of the unit the organization where signature of Mr. Ramesh sir was there. So over to Sunil again.
Thank you, sir. One clarification I would like to bring here, sir. Actually, I'm employed in BSR Co LLP, so it's a separate legal entity as compared to KPMG. And I'm taking this session as a part of my, personal interest, you can say, and not representing the firm. So just thought would like to bring this disclaimer. Yeah. So I think over to you, PR Ramesh, sir.
My only request, sir, you have to tell us 5 minutes whenever you just feel okay about the future of also this profession, particularly audit spec.
Sure. I'll speak to you about the future of the profession. And recently I had addressed a study circle meeting of the Bangalore cantonment for 2 hours. And that was the future of the audit profession in a way. And it covered a lot of things. I don't know, you've slated this for 2 hours, but I can, no doubt we'll keep time for questions. But if you wish, I can go through a little faster insofar as the reporting is concerned and pull out the presentation which I had done and touch upon audit quality and part of the future we can talk about from that presentation which I had made. So I can then, deal with your request too.
Subject sir, whatever the way you feel, sir, we are, you know better than us that what should we have knowledge from in which field, how we should take from you.
Yeah. So I may pull out that presentation a little later, but I have a presentation now which I'll begin to share, and please bear with me till I put up that presentation, and let me know if it is visible.
Yes, it is visible.
Yeah,
okay.
It's visible.
Thank
you.
Visible. So first of all, thank you, Sunil ji, for your kind words, and Prakash ji more. I mean, our relationship is on a completely different level. It has nothing to do with a CCM or a chairman of Deloitte or former chairman of Deloitte and anything. I have been the benefit of Prakash ji's hospitality in Jaipur. And I must say, I'll never forget those moments which I've spent in Jaipur. But more importantly, for many of you who may not know, Jaipur is closer to my heart than many places. First, as you may not know, my membership number is 070928, and that's from the central region, of which Jaipur is a part. So, people associated me with the South. East used to claim me as part of the East. I've spent enough time in Western India, but membership number is, shall I say, qualified from the central region. That's one. Second, in my life, I've spoken at a number of places, number of conferences, seminars, and in over maybe 33, 34 years now. My first ever public talk, even to a smaller group of people, was in 1988 when CARO was amended. So the topic you all have chosen, in a way, CARO, is again closer to my heart, because if ever I started speaking, it started with this subject in Calcutta, and I had never spoken before. I had really butterflies in me. Thereafter, thankfully, it has been a good journey. I've spoken, but yet again, another point which I want to make. Amongst all conferences, one speaks at the institute and other bodies. An institute's All India conference is a prestigious event. And All India conferences were not held every year. In those days, All India conferences were held, I think, once in 4 years, if I remember right. And I'm putting the clock back for nearly 30 years, 25 years in a way, close to 25 years. My first address at an All India conference presenting a paper was in Jaipur in 1996. So many firsts of mine, in a way, are associated with Jaipur. First to be qualified insofar as Central Region is concerned. The subject which you all have chosen is my first public talk. My first presentation in an All India conference, it was at Jaipur. Thereafter, I've spoken at All India conferences, international conferences, institute, and all of it. So I don't know what's in your magic, but something associated with Jaipur seems to be pushing me higher. And I'm hoping I'll get another opportunity to actually physically come and speak at Jaipur. And I have spoken at Jaipur earlier on a number of occasions, and thanks to Prakash ji and others. It's always been a great experience. And to see the number of knowledgeable people who are there is uncomparable. And the timing which you all maintain, like today's event, it started bang on at 5 o'clock. Those are hallmarks of a profession and a professional. So let me come back to this topic, which is enhancing audit and financial reporting quality through CARO, of course, and there is changes to Schedule 3, and we can talk about other things as Prakash requested. But I must say that I may have had 40 years of experience. I've signed some of the biggest accounts in the country, whether it is Infosys, ITC, TCS, Tata Steel, Tata Motors, many others, which are very, very large in today's context too. And even though at times when I was signing, it was large, and some of those I have signed were the 100th year balance sheet also. So over the years, I've been fortunate to have done a lot of audits. But today, the situation is completely different. I've retired. Maybe I should say I'm thankful I've retired, because the scenario is completely different. Audit is under a challenge. The pressure on auditors is enormous in terms of expectations. And this subject of CARO and Schedule 3 is another added pressure, which when we go through some of the clauses of CARO, you'll realize that there is a big shift which is happening. And the third is we have a regulator who is new, and the regulator is the pendulum as far as the regulator is swung is extreme. Prakash ji made some remarks, and it's true. There is a serious concern as far as this regulator, but the fact is we are now being subjected to an independent regulator, independent of the profession. At least in the profession, the professional body is the one which has developed all the standards, which are familiar with how work is done, which has professionals who have vast experience in actually doing audits of public entities, who would test your audit quality. But now we have an independent regulator. That's another thing. And lastly, the whole audit is under a threat because of technology. The future, when I was asked to speak on the future of the profession, I used to ask this question: do you want me to speak about the profession of the future or future of the profession? Because when you use the word future of the profession, it almost implies that there is a doubt about the future of the profession. But when you're talking about profession of the future, it means that you want to know how the profession will look like in the future. There's no doubt about the profession continuing in the future. So this is the other threat which is happening. Technology is one factor which could disrupt our audit profession and the requirements of audit and the way audit is done and by whom audit is done completely differently. Before I get on to CARO, I also want to say, when we talk of all this in future, though I'll speak speak about it towards the end, we must also be prepared for a day when audit can be done by others other than chartered accountants. Now, if a ATM is dispensing cash, ATM is not a cashier. It's a machine which is doing. So a whole host of technology could replace an auditor. If somebody possesses technology, he can as well do the audit equally effectively than all of us who have been trained through our article period and thereafter in doing audits. So there is a threat. We are seeing the threat across in many sectors. Just as much as the legal profession today is threatened by accounting firms getting into legal, there is nothing which prevents other service providers from getting into audit as a one-stop shop for all services. Because once it becomes technology-oriented, then the cutting edge of your training, your past experience, all will become irrelevant. It will get reset. Yet another dimension, it's maybe a talk for another day, we may have to think about it. The way things are going. Today, a CA firm is a firm of chartered accountants with everybody who's a chartered accountant, right? Now there is enough about talk and maybe action around multidisciplinary firms. So it's no longer just the traditional CA firm when I started, which did audit and tax. Now it does far more things. And we have a lot of other requirements too, with requirements of technology specialists, requirements of forensic specialists, requirements, and forensic specialists, not all are chartered accountants. You could have ex-policemen, ex-CBI, etc. as part of forensic teams. They will also be part of your firms. You will have industry specialists. You could have people from, shall I say, the merchant banking team into your community, into your firms. Because when you're doing deals, why should you deal only with one part of it? Why not the whole? So the character of a CA firm is changing so dramatically that if I reflect back from the time when I started my career to what it is now, it's completely different, including in size. Today, we have CA firms in India of 10, 15,000 people, but across the world, you'll have firms where a single office will have several thousand people, so maybe several thousand partners itself a particular country can have. That apart, the point I was coming to is, when all this change is happening, it is possible for a day when CA firms could be owned by non-CAs. Because if we are talking about the fact that you need to, I think, even Piyush Goyal, I think when he addressed, I didn't listen to it, I intend to listen to it. I understand he spoke about size of firms, etc., and the need for investment. Now, if you have to invest, I have been a chartered accountant for so many years. Where will I bring all that money from? And we are talking of huge investments in technology if we have to compete with other service providers. In such case, what will happen? Do you think I'll only borrow and who's going to lend to me looking at my face? It's highly likely that investors may come into CA firms. Today, regulations don't permit any of it. But at a point in time, we may have to be prepared. If work is going to be done by non-CAs, what permits that extension of a CA firm to have investments by non-CAs for the benefit of CAs? So finally, it could become entities which are rendering services, audit being one among them. And the whole question of whether a profession will continue as a profession, because what is a profession? A profession started off as a collection of individuals specialized in a certain activity and being qualified for that activity and being licensed for that activity. Now, if that can be done by anybody, then it is not a profession. It is a service. And that is a different subject which we can talk about another day. But as I observe trends, most important in all of this, even as I give my talk today on CARO and other things, observe the trend certain things, and I keep saying this in all fora, even in the past, even well before NAFRA came in, when the company's bill was being discussed, and there were provisions in it. When NACAS, when the former thing was only accounting, and when it moved on to including auditing, then I said, look, read the tea leaves. The message is loud and clear. There will be a body which is going to take over your standard setting. Maybe they will involve you in some way, or maybe they will not involve you. And there will be a body which may have independent oversight on you. Sure enough, the Companies Act became law. It had a provision which was not activated till recently when it happened. And lo and behold, you have NAFRA, and there is enough about NAFRA which is being spoken. People have different views about NAFRA. We can only speculate as to what the future will be. But the one thing is for sure, whatever the speculation, the future will be significantly different from what it is now, and maybe far more onerous obligations on all of us. So that is what we have to be prepared. Therefore, everything we have to observe as a trend. We cannot live in the past. The past is over. We'll never go back to that time. I had glorious days in my audit profession, and I can never expect to go back to those days. Those were the days where the auditor was also worshipped. When an auditor came in, you should see the awe and respect. It is like how, in our younger days, we would worship the schoolmaster or the school teacher. Today, I'm not sure whether the younger generation gives that same respect for the school teacher. And today, when we meet the same school teacher on the street, we still are in awe of him. And even if he scolds us, we respect him. But that's a different respect. And so was the auditor. The auditor was, treated like God. But now an auditor is any other service provider. And like any other, like an automobile company has hundreds of service providers, you are a commodity. And you're dealt with like that. So the question of getting back that respect is in our hands, but we also need to deliver to the expectations and protect our own future. This is one such reporting obligation. You see, before I get into this reporting obligation, you have to realize, and just forget the law, forget standards, everything you set aside. Just think about it, that you are rendering a service and that service is audit. Okay? You have done audit, and the reality is you claim, and of course everybody also says so, that an audited account, an auditor's work is relied upon by a number of people. It is relied upon by investors, it is relied upon by regulators, it is relied upon by shareholders, by employees who exercise stock options. They also look at companies. It's relied upon for the economic data it provides. So many other purposes which it can have, even tax authorities rely upon it. All that is fine. But in form, we are appointed by the shareholders. So we are answerable to the shareholders. Fine. Again, as I said, leave the law aside. You have done a work, and you say your work is very, very useful. How does one know what you have done? How does one know what one gets to know what is the outcome of what you have done? You have done something. And what used to happen? Our audit reports used to be just plain templates. We have carried out the audit of blah, 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 blah. And we have received all information explanations which to the best of our knowledge and belief are necessary for the purpose of audit. The books, the balance sheet, profit loss account agreement with the books, blah, blah, blah. And then we said it shows a true and fair view. Now we have added more things by saying what is management responsibility, what is our responsibility, and yet we go on to say now key audit matters have got included, and then we say it goes on to show a true and fair view. If we have done it in accordance with auditing standards. Auditing standards are a large bunch of standards. So how does still one get to know what is the outcome of what you're doing? How do they get utility out of your product or your service rather? The utility comes from you communicating what you have done and the outcome of what you have done, other than in those 3 words, true and fair. Leave that is something. If repeatedly you say true and fair, everything is true and fair, fine, but true and fair has different grades possible. There may be things which I may want to know, which I'm not getting to know because you're only using those 3 words, true and fair. That is the genesis for a enhanced reporting. It enhances the quality of audit in a way because through this reporting, you are required to focus your audit on certain areas which otherwise you would not be focusing on. You may not even carry out those things, but it may be very useful for a regulator or somebody else. So now through this reporting, they're forcing you to look at something and report on something. Additionally, we must be prepared for a day. And this will change. This is, as I said, when you look at CARO when it started in 1975, if in 2020, there has been a lot of change. But observe the trend of changes, which as you study CARO 2020, it was deferred fortunately, but if you study the trend, you will notice certain principles are emerging or certain requirements are emerging, which as a profession we have to be prepared for, which we were not in the past prepared for. So essentially what I'm trying to say is, more and more, all of what you are doing will come out into the public domain. Even what you're not doing will come out to the public domain through a variety of means. And then we have, you've got a center of audit quality coming up, is in Jaipur. You're fortunate it is in Jaipur. When you look at that Center of Audit Quality and look at that audit quality maturity model with the institute has come out with, though it is recommendatory at this point in time, it opens up like a Pandora's box. It could, reveal a lot of things. And it means, therefore, that you will get rated, you will get evaluated, you will get compared, which was not there in the past. Past your report, if I signed an account and tomorrow some other auditor signed the same account, there was no comparison because the reports looked alike. How do you evaluate? Now you will have AQMM. You will have also, as in many countries in the world, there is audit quality reporting in a way. There are measures of audit quality which become public even for specific audits. And I have some thoughts on that, which I spoke about when I talked of future of the profession. So we have to understand that no longer is audit about I being a god, I come, I look at everything, I just sign a report, and which has just said true and fair. You have to take my word for it that true and fair means everything is true and fair. That's not enough now. They say your word is not good enough. We want to know many things. We want to know how you did the audit. And certain areas we want you to look at and tell us. And that's how it is. So let me begin with CARO 2020. But first, I'll very quickly touch upon the history of CARO. I'll take you through what are the guiding principles of CARO 2016 because those principles are applicable for 2020. We followed the same principles. And I must say, I've been fortunate to have been involved in and you can throw stones at me, you can curse me, you can say what you want, but I've been fortunate to have been involved in the development of CARO in 2015, in 2016, in this CARO 2022. There is a lot which we can't resist, but we will have to shape it and accept and bring it into the reporting, which is what we had to do. But if you look at the original version of CARO 2020 and the final version of CARO 2020, that itself is an eye-opener in terms of what the government wants you to do. And thankfully, that has now been truncated into what we have now. But even what we have is very, very burdensome or onerous. So there are these guiding principles, and I'll tell you, and you can look at these guiding principles and say, hey, this is the principle, this will become the trend in a certain different way. Then very briefly on the applicability, and when I talk of applicability, the problem with chartered accountants is many of them will lay back and say, oh, it does not apply to me. So they think, now it's almost like saying, oh, I have not been affected by corona, it will not come to me, don't worry. But the fact is, it can come to you someday. You have to be prepared for it, and that's why you get vaccinated and all that. So same way, what is not applicable to you today may become applicable to you tomorrow. That is that trend. It always starts with up to a public interest entity, then they'll go lower down. Then they say, why not to everybody? And that can happen to anything. And not just reporting, it can happen to all aspects of our profession. Just as a new regulator came in, that's exactly how it happened. First, from accounting standards, the body was converted to accounting and auditing standards. And lo and behold, by the time we could blink our eye, we have a regulator now who's duplicated. Then we have, I'll take you through what is different between CARO 2016 and 2020. On a plain reading, it may seem a few, number of clauses, it may seem a little, but actually if you go to sub-clauses, there's a huge, huge addition. Then I'll discuss some important clauses, and lastly, some takeaways. Schedule 3 I'll touch upon. And this amendment to Schedule 3 is significantly because of what we pushed for as a profession while CARO 2020 was being developed. We said that you can't expect an auditor to produce a voluminous report and be responsible for it. An audit, that data should flow from the preparers of the financial statements, because it is the preparer of the financial statement who has not only access, who has the primary responsibility for the preparation. My job is to confirm and verify. Verify and confirm. That is my job. So allow me to do that job and ensure that in the financial statements which are prepared by the management, approved by the audit committee, recommended by the audit committee, approved by the boards, those are having the same information which I will verify and confirm. So that's how the changes came about in Schedule 3 and though CARO 2020 was announced first, thankfully it got deferred and Schedule 3 came in a little later. So let's get on to what is the history of CARO. 1975, I was a young boy then. I still remember listening to Yezdi Malegam speaking on Mao CARO 1975, and I was in awe about, and that was the first time Institute developed a detailed guidance note and number of clauses, the whole thing about maintenance of fixed asset register. Till then, all accounts were being done. Nobody even thought of fixed asset register is required and all that. When that first came in, you can imagine the number of companies which had to start developing a fixed asset register. It's come a long way now. And many of you who are listening to me today may have been young boys then, not even in the CA profession. I was in the CA profession then, so I knew what it is. And when Mao CARO came in, the profession derogatorily called it Mar Khao. Means it was really a beating for you people who speak Hindi better than I do. So you know it better because it's too much for the auditor, Mar Khao. And then that was revised in 1988. This was when I said I made my first public talk. Then Mao CARO got truncated into CARO. That time, of course, again, profession said, look, both ho gaya Mar Khao. Now they said CARO. So they said, use the word Hindi word CARO as CARO. They said, you have no choice now. So the CARO 2003 came in and it had 21 clauses at that point in time. In 1988, when Mao CARO came in, 20 clauses it had. That time people said, oh, it's like the Congress 20-point program and all that. And a whole host of comments were passed. Thereafter, for a long time, there was no change. In 2015, we had, under the New Companies Act, a new CARO. I was involved in that. Then, some things which we removed and threw away now has come back again. I'll explain the reason for that too, but really those are not harmful. And CARO 2016 was again amended for a certain reason. And lastly, we have CARO 2020. Now let's focus on the guiding principles. This is very important to remember these guiding principles. Okay. The first is matters to be considered by auditors, which otherwise would not normally be focused upon due to materiality or other considerations. In a company where fixed assets are very insignificant, then why will you in an audit focus on fixed asset? You will not look at it. It is not a manufacturing company. It may be pure trading company. What is there? A few furniture, desks are there, some computers. You would not have focused on it. But through this CARO 2020, you're now required to, and it was there through CARO also, it came in then, you're required to focus on fixed asset, whether it has a register is there, whether details are available, physical verification, all that. There are many matters like that which got included in CARO because the regulator, user of the auditor's audit reports would want to know what is the situation in that particular area. And one amendment which has been made recently in CARO, which again has been enhanced in CARO 2020, is on whether title deeds are in the name of the company, etc., with formats, etc., given details being given. The second guiding principle is the auditor is required to express views on certain audit procedures, explicit assertions. I have verified related party transactions and it is in compliance with law. And so that's an assertion, specific, you're saying on certain aspects. I'm giving you an example here. The third guiding principle from 2016 CARO to 2020 has been that in the past when CARO was there though, auditors' reports used to have some very inconsistent reporting for the same clause. They used to use terms like generally, regular, even though there was a requirement to say what are the delays, how many cases and defaults. People wrote, generally, not give information in the manner it is required. Now you have to remember that information in reports, a report cannot be just means to information. You know about the famous case also in relation to that. It has to be information. And for it to be information, it should be capable of being evaluated. So it has to be more specific with detail. And that's why this CARO 2020 has provided formats. You have no escape. You can't use generic words. You have to give that number, etc., at the table, even if it has to be compiled down. Then in the course of all of this discussions, and this time what the government did was, they involved everybody and far more actively. They involved the regional directors, across in the ministry, in the company affairs ministry. They involved RBI, they involved SEBI representative, apart from other professions. Now the bankers, industry representatives, each one gave their own inputs. So when you have inputs by so many, it will become a huge basket. Everybody comes and feels something which he says, I require this. So something's got included there also. And then you have the changing needs, which is there, which is an expectation, users, regulators, etc. And a lot of recommendations came from regional directors and the ROCs based on all the frauds and other things which they are noticing. They are the first ones to which all the complaints go, and they look at it. MCA passes it on, whether it's the SFIO or the ROC, and they had a huge list of matters in terms of saying this is happening, that is happening. We want auditors to look at it. So at the end of the day, what is it? Regulators, government, users are expecting you to be their eyes and ears. So there is a huge burden. In form, you're appointed by the shareholders. In substance, in a way, through all these requirements, getting into your report, you're reporting to many people who are using yours. And that is what I'm reminded of, a book written by the former chief of the Federal Bureau of FBI, Federal Bureau of Investigation, James Comey. He titled his book, A Higher Loyalty. Because he mentioned in his book that he is not loyal only to the President of the United States. He says, I have a higher loyalty to the Constitution of the United States and to the entire citizenship of the United States. Similarly, we as auditors, we have a higher loyalty going beyond the shareholders, and that is very, very evident through this CARO 2016. So let's quickly now go on to the applicability. Okay. It has been deferred. Now it is applicable for financial years commencing 1st April 2021 as of now. So, and then the other applications have not changed in terms of foreign companies, branches of companies, etc. You can read that. I don't want to elaborate. Private limited companies, which are not subsidiaries of public companies, also it covers. And those having paid up capital reserves and surplus not exceeding 1 crore. 1 crore is nothing these days. Does not have total borrowings of 1 crore rupees from any financial and total revenue of 10 crores and above. So small companies are, of course, exempt and all that. So let's move away from the applicability and get on to the analysis of CARO 2020. If you just look at this snapshot purely on clauses, CARO 2016 had 16 clauses, CARO 2020 had 21 clauses, has 21 clauses. There are 5 new clauses. There are 2 new clauses which were 5 absolutely new, 2 which were reintroduced from earlier versions of CARO. 11 clauses have been modified. 4 are the only clauses which are continuing unmodified. 1, of course, has been removed because it's already in the main report. So it's not removed really, it's there. This is where we are. Now, if you see the clauses which are continuing, loans, investments, guarantees, that compliance with section 185, 186, maintenance of cost records, related party transactions, and non-cash. The 10 clauses have been modified, those that relating to fixed assets, the one relating to inventory, relating to loan repayments, acceptance of deposits, some marginal, but some significantly modified. Defaults in repayment of loans, application of funds, reporting of frauds, nidhi, etc. New clauses are some of them are very potent. Here is where we need to worry about and focus on. First one is on transactions not recorded in the books of account. Second, the internal audit was there in the past, so we don't have to worry. We can follow the past guidance too in a way. Cash losses is more informative, nothing to worry about. Statutory audit resignation is an obligation cast on you now as a new auditor to consider the comments of the earlier auditor. Then the company's ability to meet its liabilities, very potent. CSR compliance is not so significant. And for the first time, consolidated financial statements also got pulled in through a clause which requires you to report on what qualifications are there in all the subsidiary and group accounts which you have consolidated in your books. What got removed is managerial remuneration because that is already in the main report. So if you see the clauses and sub-clauses purely from number, I told you it had come to 21 were the total clauses. Together with sub-clauses, now the number is 47. So when we talk of CARO, the reporting requirements are actually 47. It's huge. So don't get, because one and then the A, B, C, D, and some of them A or B or C or D could be very, very significant. So let's look at clause by clause what's happened. And then I'll touch upon the main clauses, and particularly some of them are potent. But you must remember, audit, and one of the shifts, as they say, earthquakes happen when there are plates under the earth's shift. And that's where the earthquake happens and buildings collapse, whole host of things collapse. So there are some shifts in audit reporting and auditors' work. Now, that is like an earthquake. We have to be prepared to see that as a profession, we are so strong that we don't collapse. And what is that shift? The shift is what I call from hindsight to insight to foresight. Historically, an auditor reported on the past certified financial statements of what happened. Then increasingly when CARO came in and other things came in, including in financial reporting, it shifted from hindsight to insight. Means a little more detail for you to be able to understand what has happened, etc. Now the shift is from insight to foresight. That means and then when I talk of trends, this is yet another thing which you all must remember. The trend when it shifts from insight to foresight is, as an auditor, you're expected to be prepared to predict the future and stand by it. Now, normally when we go to a Jyotish and show him that thing, horoscope, he will tell you your future. Some of you will take it very seriously, modify your lifestyle. Some will say nothing or will do nothing. In any case, he is not accountable because he can say so many things subject to a lot of caveats. And in any case, the future is something, by the time you would have forgotten that your Jyotish said something. The reality is that now as auditor, we are required to speak about the future. And one clause in this CARO requires you to talk, which says whether the company will be able to meet its liabilities without defaulting in the next 12 months. Isn't that a prediction of the future? You, in a way, indirectly certifying the future. That is a shift. And believe me, when you look at that shift, and if it is happening, there will be many more shifts which will happen. The reason it will happen is you are saying you are the expert. Second, as an auditor, you have access to the books. You spend a lot of time inside a company. The investor, the shareholder, the regulator, they don't spend that much time. And when you are an expert and you spend so much time, who is better to be able to speak about foresight? You. Otherwise, you'll have to say, I don't know the future, then I'm not an expert. So if we want to retain the credibility of our profession, we will find additional pressures on us to be able to meet certain expectations, which we've never done in the past. We cannot say, oh, we never did, it is not CA's job, but slowly that creeping expectation is happening. So coming back to this comparison, and you will see that shift in this comparisons also. 2016 and 2020 in the area of fixed assets, there are two changes broadly. One is the word fixed asset has been replaced with property, plant and equipment because the accounting standard now is property, plant and equipment. Second is it got extended to intangible assets, maintenance of proper records, etc. And then there is also on the material discrepancies which have been noticed, whether they have been there in the past too on physical verification. A format has been provided for this title deeds, and I'll come to that in the individual clauses. That's the change. Earlier 2016 had no format. And the second change in this subclause has been, the leasing standard came in, is on operation in AS 116. And that requires right of use assets, leased assets come onto the balance sheet now. And that is why many of the leased assets, the leased assets will always not be in your name. You are after all a lessee. And therefore that carve out has been done to say other than properties where the company is under leasing arrangements. And revaluation now, the quantification of materiality has been put in and you're required to say if the change is exceeding 10%. That's why I said it's becoming more evaluative. Now you can read the report and say, oh, this earlier the wording was, there were companies revalued. There was no requirement to report on revaluation. It was in the financial statements only. Now the auditor's report requires you to say whether the change is 10% or more. On Benami transactions, we will talk about it. Then on inventories, again, there is an evaluation of the materiality. And there is a very potent clause insofar as returns with banks. We'll talk about it. In loans, etc., there's huge changes. I'll speak about it when I cover those specific clauses. There's a lot of changes in this in relation to loans given, which we need to cover. And except on the deposits, there are marginal change, which is there. The maintenance of cost records to actually there is again hardly any change in this. There is no change in a way. And so unpaid statutory dues, now you have GST. When CARO 2016 was there was no GST, so that word got added. Broadly, there is the same thing with statutory dues. Again, it is widened in a way. And then Transactions not recorded in the books. This is a new one, again, very, very important. Defaults, a format has been provided. We can look at that. And then a set of new clauses about company being declared defaulter, willful defaulter, with the application of loans for the purpose. Let's go on to some of these new clauses, but some of them are really, really very worrisome. Okay. So let me go on clause by clause before I get on to, instead of focusing on this comparison, and focus on the important clauses, but I'll quickly touch upon some of the clauses since this is a comprehensive reporting in a way. Property, plant and equipment, really nothing to worry about other than they've given a format for the title deeds. As to if property is not in the name of the company, you have to give what is the carrying value, whose name it is, the property is, if it's not in the name of the company, whether that person whose name, in whose name the property is held, is a director or promoter or relative of an employee, and why it is not held in the company's name. All this was not there before. You can imagine when you say, because earlier it said provide details, nobody, now a format is specified. And the format has been, while when you develop a format, it's far more comprehensive. So with this, because some of the government officials said, no, often it is held in the name of relatives. Pure name is of no use to us. We want to know whether the person is related. I don't think they've used the word directly or indirectly, but the format includes relative. Then I spoke about right of use assets, which is the leased assets, and revaluation has been included. Then the last is whether any proceedings have been initiated or pending against the company for holding any Benami property under the Benami Property Transactions Prohibition Act. Now here is a pure reporting. And then we said that, look, if this is pure reporting, how do we know there have been proceedings, whether they've been initiated and all that? Then they said, no, but this is very important. How do you know of other contingent liabilities? How do you verify contingent liabilities? By asking the company, by looking at all other related things. Somebody has paid legal fees to a lawyer. Then you probe into why did you pay that lawyer? You'll find it's in relation to Benami law. So he says, you as auditors are experts in being able to ascertain what is happening. It can't be only on info. Then we said, look, why don't you require the companies to first report whether there are any proceedings initiated? We as auditors, we will use all our techniques to see whether that is true or whether it is not true, to the best of our knowledge and belief, and using all our procedures. So now this Schedule 3 has also been amended, and this same thing has got included in Schedule 3. But the point is, it brings out very useful information to the user of financial statements, who then suddenly realizes that, hey, look, there are Benami transaction proceedings against this company. There are issues which are otherwise was never being reported upon by anybody. So these are some of the things which I'm talking of as trends, which are signals which come up in enhancing the quality of financial reporting and the quality of audit. That's why my talk was titled Enhancing the Quality of Audit and Financial Reporting. So there is nothing else as far as property, plant and equipment for us to be worried about. And other than the change of name from property, plant and equipment. So, and title deeds, I spoke about all of this. Okay. Now, let us get on to the next one on inventories. We always had whether the verification was done, etc., etc. Now you look at the wordings, whether the physical verification of inventory has been conducted at reasonable intervals, that was there before. Whether in the opinion of the auditor, the coverage and procedure of such verification by the management is appropriate. You can't say, no, it was verified. Did they count it properly? Did they cover everything? This is a very, very significant obligation now on the auditor. And then there is a discrepancy. But the second one is the more disturbing thing. Whether during year, I'll take you to that particular one. Let's get on to we're moving away from this one. Whether during any point in time during the year, mark the words, any point in time during the year, the company has been sanctioned working capital limits in excess of 5 crores. Sanctioned, irrespective, they may not even have drawn 1 rupee. In aggregate, sanction, and it could be small amounts, all aggregating to 5 crores in sanctions from different banks. From banks or financial institutions on the basis of security of current assets. If so, whether the quarterly returns or statements filed by the company with such banks and financial institutions are in agreement with the books of accounts of the company. If not, give details. Now, what happened? There are huge complaints saying companies are filing information with banks, which has nothing to do with the audited accounts. Year end, when the audited accounts and the year end with the audited accounts come months after the year end for many companies, private companies, etc. So March accounts which come in August or July show completely different picture. Whereas all through the year, the company would have filed, I have so much inventory, I have so much other current assets, and bank would have financed it. And by the time when it comes in August, it's all history. 5 more months have gone past. So there was enough criticism about those. Then they said, no, auditor should look at it. If those are not from books, you need to know. Banks, it's a fraud. Banks are being cheated. He said, how will we verify? We normally don't look at returns filed periodically. How does it concern my ledger balances? My ledger balances are accurate. That is what I need to report upon. Whether the accounts show true and fair view, what has it got to do with true and fair? But they wouldn't listen. Everybody would say, no, this is something which you need to look at. You have to. And it started off with monthly accounts, and finally you're talking of quarterly returns or statements. Because they said, and whilst doing this, we were cautioned by the fact that companies would file quarterly returns, etc., 3 days before the end of the quarter. So you can never compare with the books. So you file March 28 or say September 28, whereas the quarter ends on September 30th. So the 30th balance will be different from 28th. And in some cases, it's heaven and earth balance. If you're saying 10 crores is the inventory on 28th, you'll have 10 lakhs inventory on 30th. How is that possible when the sales have not gone up significantly? So patently, the returns were fraudulent or wrong. That was the feeling. I don't know the truth, but that was the feeling. Now an auditor is required to verify and confirm that the quarterly returns or statements filed by the company are in agreement with the books. Here again, as the audit profession took it up and said, you are putting the problem on us. Let a company first publicly, when it approves the accounts, say that their quarterly returns they filed with the bank are in agreement with the books. Then we will verify that and certify as part of our audit process. But the fact is, you're now required to do a thing which you've never done before, which you would not have otherwise done as part of your audit. And it's a very, very significant obligation. How many bank accounts? Look at the audit work goes up by a huge multiple. Look at and whether fees will go up by the same multiple is a challenge which profession is asking. Now, how do we get this? How many banks, branches, what are the types of returns? Frequently it has to be done, and we have to verify with the books. How are those books maintained for us to be able to match? It's not an easy thing. In some cases, approximations are involved. So the question is, if not, give details. When you read this, that give details is very, very important. It is one thing to say there are differences. Here, there's no materiality mentioned. There's nothing about 10% or more, nothing in terms of pure wording. It just says, if not, give details. That means you'll have to list that whole thing in your audit report. I don't know how it will pan out, but this is a very, very big change as far as CARO is concerned. Okay. And then let's come to loans and advances. Details of investments. Clause 3. Clause 3 has, if you see A, B, C, D, and there have been significant changes here. Look at the first one, whether the company has made investments in or provided any guarantee or granted any loans, and the wording has been brought back. Advances in the nature of loans. That means, supposing you give a supplier 10 crores when his whole supply is worth 10 lakhs in a year and say this is advance for supplies, it is an advance in the nature of a loan. So they've managed to loop in that also. So if the company has made such investments or given such loans or advance in nature loans or provided any guarantee, then the following 5 clauses, if so, A, whether the company has loans or provided, you have to give the aggregate income, how much during the year, how much, and the balance sheet date, what is outstanding. And so similarly, in respect of what is given to subsidiaries, joint ventures, etc. And whether these are, but the second part, B, is a clause. Again, as I said, there are many, many potent clauses. You'll find in this, it says whether the investments made, guarantees provided, security, and terms and conditions of the grant of loans are not prejudicial to the company. You are opining. You're sitting in judgment on a proprietary matter. He gave that loan or advance in the nature of loan. Is it prejudicial or made an investment? Now, as a company, I may make an investment in a startup. Tomorrow, the startup gets dissolved, goes into liquidation. Like many startups, it happens. Was the transaction prejudicial to the interests of the company is a question. Using hindsight, your foresight will be judged. You will be questioned on how you said it is not prejudicial, when you knew that is a waste investment, that it is going to go bust. Similarly, when I give a loan, I don't know. I give it with genuine, shall I say, intentions. Yet if something happens, how do I know? How can I be held accountable to say it was prejudicial to the interests of the company? A third thing, which is the most dangerous thing. Let's say you have a parent company. There is a subsidiary. You have invested in the subsidiary. And like now, during Corona time and all that, that subsidiary is in a certain line of business. Let's assume it is in the business of hotels. Hotels are closed down. Hardly any occupancy. They're struggling. So what do you have to do? As a parent, you have your investment in it. It's a valuable hotel. Maybe when things normalize, it will improve. Now you will fund the hotel to enable them to pay the salaries and keep it running. Now, it's highly likely that the investigating agencies, when they come after you, they will say it is diversion. Because anything which is going outside of the company will be considered as diversion. But more importantly, you have to say that it is not prejudicial to the company. Because they will say, a loss-making entity, why are you funding? It's good money after bad. Many cases are there where the government has said that it is as an auditor, there is a clause in the Companies Act where for you to determine whether a transaction is prejudicial to the interests of the company. You have failed in your duty because the directors, even though it may have been approved by the board, everything, they have put money into a loss-making entity and it has never come back. The parent company has suffered and has defaulted with the bank. This is yet another example. As auditors, you're required to exercise foresight, you exercise judgment, and sit and give an opinion on a proprietary matter. How am I concerned as to how somebody runs his business? He may want to make losses, let him do. My job is to see that the losses are reported and I say that this is correct. Isn't that my job? Supposing an airline employs more people than required and incurs a loss. Who am I to say you should not have employed so many people? Am I to sit in judgment on how a company should run its operations? The answer is no. I am to report what is earned, what is spent, and what is the profit, and the assets and liabilities of the company. But this is a big shift which is happening. Then the other things were already there in terms of whether loans, the repayment of principal or regular, etc., in 90 days. I won't get into this. But look at the 2 clauses which got added. And this got added because of many of these examples which are being thrown around by ILFS, DHFL, whole, evergreening. Whether any loan or advance in the nature of loan granted or fallen due has been renewed or extended to settle overdues of existing loans, which is evergreening. Look at the amount of work involved in this clause. And thankfully, it's not for a financial services entity, but even then, look at the amount of work in this. And if there are loans given without specifying a due date, you are required to report that. Very, very important clauses in this. So this is a trend which you need to be conscious about. And I'll keep repeating the point about trend, etc. And in all of this, they are also seeking information. Look at this, whether the same thing, whether the loan or advance which has fallen due during the year has been renewed or extended, or a fresh loan granted to meet overdues, means like evergreening in a way. If so, specify the aggregate amount. The answer is not yes or no. You have to give information. How many of such loans were renewed or extended? What is the percentage to the total? Look at the amount of work which is involved and the reporting obligation. If I mean, I'm horrified. I would definitely would be scared as an auditor to be doing an audit all over again. I'm sorry to say this, but this was not an obligation then. So these are some of the challenges which are coming in this clause on loans. Clause 3.4 on investments guarantees compliance with 185, which is the same as I mentioned earlier. Deposits also, there's really no change in deposits and cost records. I pointed that out earlier. Same is it with loans to directors, whether the provisions of 185, 186 have been covered, except that a table has now been prescribed in terms of if there is non-compliance. And let me get on to, I'll go past all of this. Deposit of statutory liabilities, only GST has been added. That is the main thing. Again, let's come to this new clause. Whether transactions not recorded in the books of account have been surrendered or disclosed as income during the year in tax assessments under the Income Tax Act 1961. If so, whether previously unrecorded income has been properly recorded in the books of accounts during the year. So what does it say? During the year, some tax assessment has happened. You have accepted or surrendered certain income, which you say is undisclosed income. The assessment, irrespective of which year it got related to, got completed during the year. And then what is the next issue? Whether that income has been properly recorded in the books. Now, why is this coming about? This actually was discussed even when CARO 2015, 2016 were being drawn up. But at that point in time, somehow it got postponed. Because you recall around that time, there was the VDIS scheme, Voluntary Disclosure of Income scheme. Now, what happens when you voluntarily disclose income? This undisclosed income can have a variety of things. I'm not a tax specialist. But what happens when you voluntarily disclose undisclosed income? Let's say you have 100 rupees of undisclosed income you've disclosed under a scheme or through an assessment. You have paid tax on that. And let's say you have paid 40 rupees tax. In the normal course, what would have happened in the past? That 100, you would record that 40 rupees tax as a tax expense in the accounts. In the income tax assessment order, 100 rupees got added to the income, and naturally the tax got computed. But if it was really undisclosed income, there is also an undisclosed asset, right? In every income has to result in an asset, corresponding asset, debit and credit. Now, where did that 100 rupees asset, where is it in the books? You've forgotten. You just paid 40. So 60 rupees is still undisclosed asset, because out of that asset, you have spent now 40 and tax. It may be technically a white asset, but not in the books. So the simple question which is being sought here to be answered is, has that income been properly recorded? So when you record the income, you'll record the asset. The double entry has to happen. This is a very significant reporting obligation. So be mindful of this and see what has happened in the assessments during the year. And you read in newspapers, even today's newspapers has a raid somewhere, a company has accepted 300 crores of undisclosed income. Same question will arise in that company's case. what happened to the assets? So will 300 crores of assets now be brought into the books, and what are those assets in what form? And then you'll come by, if it is fixed asset related, then whether it is included in the register, whose name it is it in Benami name? All those reporting obligations will come. Okay, and on default in repayment of loans and borrowings, there's nothing much there. Whether a company is declared a willful defaulter by the bank, fine, you have to only find out that and report. There is nothing. Why he's been reported as willful defaulter is not your business. But the new one, which has come back from an earlier CARO, is whether term loans were applied for the purposes for which the loans were obtained. If not, the amount diverted and the purpose for which it was diverted may be reported. Meaning, in the past, you were only on the broad application of funds. Now, if a term loan has not been applied for a purpose and has gone somewhere, and this word diversion is a very dangerous word. You know, the regulator's view of diversion is so different from what you and I understand as diversion. But still, there is a reporting obligation. Look at what you have to check. How much already I have been speaking for the last 1 hour, and look at how much work is just coming up in these clauses. Seemingly innocuous, these clauses, but very potent insofar as its impact and the work which it is required to be done for you to even form that opinion and report. Then the next one is actually what was there earlier in CARO, whether funds raised on short-term basis have been used for long-term. Why did this come out? They said ILFS went bust because they raised money on short-term, applied it for long-term, no auditor reported and all. There was no requirement to report. Why are you required to report if somebody raised short-term money and lent it long? That is their business. How they run their business is not your business. You have to only see whether what they raised is recorded, including its maturity, what they're given is recorded, whether it is strong enough. But the fact that there is a mismatch is not your business. But that's what now is come about. And then, as part of all these investigations of the recent financial services entities, they raised money in one entity. They lent it to another sister entity to bail out a sister entity. And they said they invested in the sister entity a share capital, which actually is from the borrowing in the parent entity. So in effect, borrowing got converted to shares, and then they in turn lent money, which again got converted into loan. So the whole thing got so, colored. And finally, when default happened in that down the line downstream entity, it had that domino effect on the parent. So this information is now being sought. Have you raised money to fund the obligations of somebody else, meaning your group companies? Again, very, very significant. Same thing with the next clause, whether you've pledged any securities to be able to fund the joint ventures or subsidiaries, etc. So that is very significant. And again, insofar as loans and defaults, a format has been provided, repayment of loans. Earlier, generally, regular, all that is gone now. You have to say who's the lender, amount not paid, whether principal or interest, number of delays, any remarks also. Willful defaulter, I will not get into. Term loans, company has taken any funds from any entity. Preferential allotment, nothing significant except sections 42 has got added and all that, 42 and 62 is there. There's nothing much in this. Fraud. This was an old clause, but what got changed here? Earlier it was fraud on by the company on its officers and employees. Now it is fraud, whether any fraud by the company or any fraud on the company has been reported. So virtually every fraud you have to. Here I have a challenge. But what is fraud by the company? If you go back to the Companies Act and see the definition of fraud, I remember once, I had made a presentation to a training program of IAS officers. And when I presented and on corporate law, etc., and I showed the definition of fraud. So those IAS officers, very senior IAS officers, who are all secretaries, they looked at it and said, is there anything which is not a fraud from this definition? I said, exactly. Now you're reading my mind. It is so widespread. We intend to create fraud, whether there is monetary loss or not. So I said, supposing I supply you with a bogus item, isn't that a fraud by the company? But will you report that also? And huge challenges. You say that company is a cheat. It didn't work one day also, the gadget, all sorts of things you talk about. No? So those are a fraud. There are many things which can be considered as a fraud by the company. So fraud on the company can also be by others on the company in same manner. It should be financial fraud in some way. But those words are not there because the definition in the Companies Act is so wide. And that's what worries me in this. But the third one in this, the second one is relating to 143.12. Again, when you report on the first one, second one becomes very critical. But the third point, whether the auditor has considered whistleblower complaints received during the year. It's not important whether you are covered by the whistleblower mechanism for listed companies. It is enough if any complaint is received by a company, could be a private company, could be anything. And you are supposed to consider that. So you are supposed to go and ask what have been the complaints. Anonymous, could be non-anonymous. There's no such thing here saying by identified persons, nothing. Technically, even anonymous whistleblower complaints could get covered. So essentially, what happens in government, if somebody complains to government anonymous, they take it and put it in the waste paper basket. They don't entertain anonymous complaints. But here, you are required to consider whistleblower complaints in the for the audit. Whether while doing the audit, you ascertain what are those complaints. If one of the complaints is, this money is being siphoned off or this invoice is fake, it imposes an obligation on you as an auditor. You can't ignore that fact. And in many situations, that investigation as to whether that complaint is legitimate or not has not been completed. So there is a huge obligation cast on you by the government through this mechanism. And look at the change it will make to the way you are. See, as they say, little drops of water make a mighty ocean. The last nail broke the camel's, last straw broke the camel's back is the proverb, right? So that means little. Finally, there is one last one which you add, which will break your back. So similarly, many small, potent changes have come. The pressure is enormous on the company. So any fraud, whether any fraud, I've spoken about this fraud has been noticed a company. And whistleblower complaints we have just covered. Nidhi, there's fairly routine, nothing about compliance with related parties, internal audit system, whether it's adequate. We had earlier been doing it under CARO, so it's almost being repeated now. There's nothing much to report there. Let me take you to the real one, non-cash transactions. This also was there earlier, so relating to section 192. There is nothing here again, 45A, but RBI has required certain reporting on core investment company. Those are vanilla. Company incurred cash losses, it's a pure reporting of fact. So I don't think we have any great work or obligation. Resignation of statutory auditors. That was a hue and cry about so many resignations. Thousands had resigned. The simple point which is being sought to be made here is, the auditor has resigned and gone. You are the new auditor. Shouldn't you, and there is already a communication from the earlier auditor to the new auditor. Shouldn't you be on guard that a new auditor, you are the new auditor, and you have an obligation under the auditing standards to verify opening balances? You can't, even the previous year auditor, if he has not continued as a new auditor, you are an alert. So the point here is that you are supposed to find out why the person has resigned. And if you have information that he has raised some issues, objections, or concerns, have you considered that in your course of your audit? Because there have been cases where an auditor has said, I have not received a list of things. Within 3 days, a new auditor has completed the audit, signed off and gone. So the government is concerned. Say, how could you? He didn't get all of this. How could you get all of it suddenly? It may not have been possible. So now you have to specifically say, yes, I have considered the issue. Now, one thing you have to remember, I spoke about a new regulator, NFRA. They are inspecting and their inspections are severe. All of what you report will get inspected sometime. So, and it's unlike you put your hand into a candle flame, it burns immediately. But in this, the burn will happen much later. Years later, when your file is picked up by NFRA and they start looking, they will say that auditor resigned. What were his issues, objections? What have you done? Show me in your file. You have reported in CARO saying you have considered. Where have you considered? What have you done? So all of this will be subject to that audit documentation standard, which is what will be the focus of the regulators. So it's no longer about issuing a report. And backing to that report is, so all of these potent clauses is the documentation of what you have done and what did you find? How did you come to this conclusion? So it's really, we need to be worried about these clauses. Then this is one. I talked of foresight, clause 319. On the basis of financial ratios, aging and expected dates of realization of financial assets and payment of liabilities, etc. Whether, one minute. Okay, whether from all the information accompanying the financial statements, your knowledge of the board of directors and management plans, you read the minutes, no? Shareholder doesn't read the minutes, you read the minutes. You have access to all of the data supporting the minutes. So whether in your opinion, there is no material uncertainty on the date when you sign your report, that the company is capable of meeting its liabilities, which are there at the balance sheet. So essentially, thankfully, it has been modified in a manner that it has come to no material uncertainty exists, that it is like a negative assurance. You're not saying positively it will be able to meet its liabilities. You say, I have not, with all looking at the ratios, looking at the balance sheet, because they said, these companies which collapsed, those balance sheets, anybody looking at the balance sheet could have said that it's going to default on because short-term loans have been used for long-term purposes, many things like that. And then auditors said, no, that's fine. There could be short-term loans for long-term purposes, but the company was about to go for an additional issue and raise share capital. So on that basis, we accepted everything on going concern. Now the obligation is an auditor, much more into affirmatively state that no material uncertainty exists. So if you believe there is an uncertainty, with all your expertise and understanding of ratios, reading of minutes, the plans of the company, etc., you have to be able to say whether it will be able to meet its liabilities. If not, you have a significant obligation. And again, as I said, all this, you need backup documentation for all of this. So Schedule 3 got amended to introduce all these ratios. Look at the ratios: current ratio, debt equity ratio, debt service coverage ratio, return on equity, inventory turnover, trade receivables. So many ratios are there. Now you are required to look. Schedule 3 has those ratios. You're looking at those ratios. And you're comparing ratios previous year to this year. It's telling you a story. You have to form an opinion. So it's like saying, a doctor has to read all the pathology reports, blood report, the report on blood pressure, report of ECG, and then finally say, you are healthy. I don't think you're going to die in the next 1 year. It's something like that. It's not an easy thing. But the doctor is the expert. He understands those reports and exactly what you are expected as an auditor to do. We can complain about this, but the fact is we have held ourselves to be experts. CSR compliance, you can look at, there is nothing, it's exactly in accordance with Companies Act. There is nothing which is there. And lastly, I will touch upon consolidated financial statements. You are required to say whether the subsidiaries and joint venture auditors have qualified any of the clauses of CARO. If they have qualified any of the clauses of CARO, which are those clauses and which companies they have been qualified in terms of pure number, how many clauses, their number of qualifications are there. This, in a way, is, earlier the requirement was, or not requirement, the intent was to include all the qualifications in the main auditor's report. We said it can become voluminous. Subsidiary may be insignificant, completely immaterial subsidiary. So then they said, no, okay, it's all right. At least now you give the number of clauses, clause number, and how many entities there is a qualification. So that is where we are. Schedule 3, if you see, is a same repeat of CARO. Additional disclosures coming out of CARO 2020. There are some key disclosures in Schedule 3 which help in financial reporting quality. Those are aging of receivables. Earlier, the receivables were over and under 6 months. Now it is over and under 6 months, so over 6 months to 1 year, 1 year to 2 years, 2 years to 3 years, and 3 years or more. So much more information for the reader of financial statements. Capital expenditure, projects. What are the projects which are incomplete? What is the aging of capital work in progress? Very, very useful information, very potent. Again, we have to verify that information. Then same thing with loans and advances. Many other CARO related things have got included, and apart from that, some regrouping. So very broadly, Schedule 3 has a lot of aging information and information flowing from CARO. These are very, very, but you're very, very significant because you have to verify. Anything which comes up into Schedule 3, it's your obligation to verify. Whether you report or not is a different thing. Company is preparing, you have to verify. So you will find title deeds of immovable property is there in CARO 2020, revaluation 2020. So that has been included in Schedule 3. Benami property proceedings included. Borrowings for returns filed with banks, that is included. Loans and advances in the nature of loans, that is included. Utilization of borrowings, that is included. Whether companies declared a willful default are included. Ratios, I give you the list of ratios. Detailed of undisclosed income, that is included. Prior period errors. Statement of changes is supposed to disclose the effect. Shareholdings of promoters now is required. Trade payables classification. Disputed payables they want to know now. Disputed receivables they want to know. Aging of seed of capital work in progress. Then fair valuation of investment, relationship with struck-off companies, something completely new, and delay in registration of charges. Earlier, whether it's unregistered or unregistered, secured or unsecured. Now, Schedule 3 requires delays in registration of charges, whether schemes of arrangements have been complied with, whether they are in accordance with accounting standards, and for guarantees given or forwarded to ultimate beneficiaries, there's a CARO reporting there. Trading in cryptocurrency or virtual currency, I don't know how this got included, but this is another keeping with the trend. And rounding off, those are already there in a way mandatory. Okay. Current maturities of long-term debt. There's a classification shift which is there, which we don't have to worry about. Some of these things are not important. So the broad takeaways is there are increased disclosures with respect to clauses in CARO 2020, significant role for the CFOs, increased data sharing with auditors, and obligation on auditors. And overall quality of audit reporting is significantly enhanced, and there is a responsibility on the management. So I will pause on this reporting thing, and if there is anything, Prakash, you would want me to cover. You talked about audit quality. Do you really want me to cover or take questions first?
Sir, audit quality I could take. Only my one query is there, sir. In the end week of March this year only, there was a circular by government that when you are doing audit of company, you have to keep track of that accounting software trail.
That has come in the rules, yes. You see, that has got deferred by a year. So that actually applies from this April 21. Earlier, it got, that got deferred by a year because industry body said, how can you expect, the year has already gone by, how could you expect it to be done? So thankfully, but still, essentially what it means, they said certain software, which many companies use, not the real large ones because they're all on ERP systems, even they have a problem, not only small ones. Everybody has a problem in keeping an audit trail. NFRA wants an audit, wants even your rough working papers to be retained. effectively. They said, if you prepared a worksheet, you have modified the worksheet, keep the original, keep the modified. I can't understand why. It's so many times in the normal manual system, we used to write on a pad, tear it. We have not written properly. We have to rewrite. Did we preserve all what we have done? No. So now in an electronic form, why do you need that? That is as far as audit work papers, they want a trail. But now in financial accounting, they want a complete audit trail. What were the changes carried out? And that has to be retained. It means in many cases, the software has to be tweaked to furnish those sort of reports and to be able to store all that volumes of data. That's a very good question, Prakashji. And I think the profession and others need to take it up. But from a pure regulator point of view, they will say, you are giving me a sanitized version. How do I know? Apne kya kiya? You knew I'm coming, so you're given a sanitized version. And that is where like today's newspaper talks of RBI coming up with that rule, na? Saying requiring people who are handling very sensitive work in banks to go on 10 days leave. But that 10 days leave should be on a surprise basis. You can't, they can't plan their leave. They can be suddenly asked to go on leave from tomorrow. Company should have that sort of mechanism. So that is
yes.
So the regulators want to come and surprise you and say, where is the trail? Show me.
Sir.
Don't show me. Yes, go ahead.
You can continue, sir. First, you take the session. After that, we can have some questions.
Okay, so let me talk for another 10 or 15 minutes on
Yes, sir.
Broadly on audit quality. Maybe I'll show one slide and talk about it. Let me close this presentation.
Yes.
I'll stop share and again share one. Please bear with me. 2 minutes.
Yes, sir. We got sufficient time.
So with these changes, sir, it seems that we are moving from watchdog to bloodhound. This is what I used to hear from the clients.
We are definitely moving from watchdog to bloodhound. That is absolutely sure, 100%. And maybe more. You're not even just bloodhound because you're asked to do things which you see, a bloodhound doesn't predict the future.
Right.
It only finds out what has happened.
So maybe we will have astrology one of the subject.
Yes. So when we are talking of the future of audit, let me not go into what is the current concerns. There's a whole host of things which we talked about. You see, the thing is, and this is the other development you can say. What is the current concern? I'm not even talking of just India. Across the world's largest companies are collapsing. These allegations continue on poor corporate governance, lack of ethics, savings and retirement plans. Everybody is losing their investments overnight. But most important, and there is this concern about oversight actions, disciplinary actions are not happening all that fine. But the most important is auditors are missing glaring signs. There is the book written by Tim Steer. You will see here. This is a very telling book. Look at the title, The Signs Were There. He picks on examples in England of big companies, big auditors. He says the signs are visible. He gives the example. And that's why CARO 2020, I keep saying, is so potent. It forces you to not only see those signs, but report the signs. And what does this person say? This person says here, look at the green portion. But the warning signs are regularly there in the form of accounting shenanigans or other clear signs that a business is changing direction for the worse, or that excellent results are being reported only because of one-off or non-recurring items. Often those red flags are either not seen or are ignored by investors and other stakeholders, of course, auditors too. The next one it says is, an annual report should be seen as an iceberg in terms of information it contains. It cannot tell you all that you need to know about a company, but if there is something that makes you feel uneasy, there may be far many more things which make you uncomfortable, which may be lying below that waterline. So, following all those collapses in England, England was the country which did a thorough review of how regulators function, what needs to be done for audit. So there was this Sir Bryden review report, very powerful report, of course. Now, in that report, and I'll speak about that report, before that, there was a lot of reasons why this root cause analysis, if you do, of poor quality audits, it covered a whole host of things, including lack of consultation culture, profits over quality, tone at the top, inadequate time, unwillingness to learn from mistakes, compromising ethical values, many things, which if you look, classify them into resources, processes, leadership, and mindset. But leave that aside. What happened is the Bryden review came up with, I will come to the Bryden review report so that you can not, let's get on to that rather than technology and all that. Because the future is impacted by that itself, you see. And there is this book, End of Accounting also, which almost raises a very interesting book, which proves why accounting is not relied upon by investors. Okay. So I can speak about that book too. But purpose, you see, core to what we do is the purpose. If that disappears or that dramatically changes, then life is different for all of us. So the auditing standard has this SA 200 as overall objectives. I won't read out to you, you're familiar with it. But Sir Donald Bryden, the UK, very recent in his report in December 19, and all of these will form the basis of future changes in the profession. He says, the purpose of an audit, in his view, is to help establish and maintain deserved confidence in a company, in its directors, and in the information for which they have responsibility to report, including the financial statements. So the question is, it is no longer about true and fair. It says the audit or certifying financial statement, it says the purpose is to establish that confidence. Yeah, this company is all right, the directors are all right, the information which they're giving is all right, and they have the responsibility. So as the obligations, the company changes, the directors thing changes, then your whole audit focus will change. But the question is, today, is that the audit focus? It is not the audit focus today. So the debate which is happening, which will result in changes, is the very purpose of audit. And if that purpose changes, you will genuinely have an issue. And he said, the quality and effectiveness of an audit has become increasingly a contested issue. Some consider that audit is not good enough, is good enough. But the starting point of this report, his report, is that audit is not good enough. He says this in hiding behind the need only to confirm and verify. Many auditors have failed to grasp the opportunity to make their reports more informative. He is himself saying in the current situation, despite CAMs and all that which we have incorporated. So there is a general feeling that auditors' reports are not informative. And that's why this CARO got enhanced. That's why LFAR is there in banks. It's a different subject as to whom you have to report, whether you need a long form report for regulators separately, for the investors a short form report. Those are all different variations. But the fact is, this confirm and verify, we can't hide just behind that. It has to be more. So when you really look at audit quality, in my view, there are 6 different buckets. There are structural factors in terms of how the profession is structured, how many firms are large, is there concentration, is there enough choice, all that are auditors appointed properly, are they paid properly, are they really independent, what are the independence rules, multidisciplinary firms. Then the environmental factors are all the whole ecosystem around who are the players, shouldn't you correct? Now, simple question which I will ask is, if you are hitting statutory auditors so much and putting so much pressure on them, who is there longer time in a company? Internal audit. And that too is outsourced. So there is no regulation for internal audit. There is no oversight of internal audit, no inspection. There's no NFRA on internal audit. There is no documentation accountability so much on internal audit. And then, but you are relying on that. It's a very important thing. Shouldn't all those components in the ecosystem before the auditor comes in be also strong? Shouldn't there be rotation of internal auditors? Shouldn't there be rotation of CFOs? Shouldn't there be rotation of audit committee chairman? Shouldn't say every 3 years, 5 years, you rotate an audit committee chairman? All these are questions which are important because you need to correct the environment. And then the subject on execution issues is a big subject in terms of what should be your sampling. Should you get away by saying I have followed this standard? How much should you sample? If there are 10 million transactions, what technology and tools you use? Shouldn't the user, somebody get to know how did you, very complex industry, how did you audit? What technology and tools did you use? How much did you sample in such a large company? And how did you evaluate the test results? And then changes in auditor's report, output factors, which I would call. There are trends, but if I give you some illustrations as to what are the things being discussed, it is unbelievable. And lastly, of course, the frequency, the timelines, is quarterly audit or quarterly reporting actually impeding the quality of annual audit? Because there's no time for auditor. By the time he finishes a quarter, the next quarter comes in. And then the race to complete results early. March 31st results, some want to publish by August 7th, August 8th, like that. Already quarterly results of some companies have come out as of today. So is there a rush? Is there adequate time? And this whole thing. So I will not get into all of that, but let us look at the reporting part only, and then we'll come on to the future. You see, the fact is, I'm saying the audit boundary definitely will get widened. It's already got widened through your CARO 2020, but if your purpose of audit changes, this will significantly change. Okay, so all of what you do in an audit, your sampling methodology, how many confirmations you obtained, did you get all confirmations? Shouldn't that form part of a report in some way for a user to know what you've done? So no longer can you sign off and then say, I've done everything in accordance with standards. Who knows whether you've done in accordance with standards? Some of these are indications. Okay. So if you look at the output in communication to audit committee, shouldn't some of these be considered? What is your audit plan? What is your materiality? What's your sampling methodology? What has the accounting policy choices which you exercise? Did you use specialists? What information did you sort and did not get? What did you discuss and sorted out with management? What were the suspicious transactions? And then related party, your analysis and interpretation of ratios. And then you have these three buckets: qualitative, quantitative, qualitative, and others. In a way, this is coming out through audit quality maturity model somewhat, but not completely. Let's assume you were asked to report in the audit report the date of commencement of audit. And mind you, these may all come in future reports. Date of commencement of audit, date of completion of audit. What's wrong in giving that? What happens when you give that? Large company, you say, I started the audit on March 28th. I completed it on April 4th. And then you say, I've complied with all the standards. I've done all this. Will it hold? How many hours you spent? How many partner hours were there? How many qualified people were involved in this complex audit? How many other specialists were involved or other persons? Which audit portions of the audit you use digital tools? How many accounting adjustments you waived, saying not required to be corrected? Don't bother about it. How many confirmations you obtained? And whether your own audit was picked up by a quality review board in an earlier year, or FRRB comments were there. Imagine if all of these were to come into an auditor's disclosure. Then a user may find, oh yeah, this audit, he has spent a lot of time. He started, so yes, so many people have gone into it. It gives more comfort. Today, you have no such information available to the user of financial statements. I'm just giving you the trend. Because increasingly through audit quality reporting metrics which are being developed, Institute has developed AQMM. Whether Institute is creating a scene or scenario for auditors to report in individual audits, once you set a trend, all this will be asked for. And this information is available. These are matters of fact. So this will change the whole future of audit. So oversight and evaluation, NFRA you have, okay. Now, audit quality indicators, in many countries, these are all what is required to be given. Fees, fee recovery, how much, what is your cost of doing the audit? How much are the fees you pay? So if it's a loss-making audit, you'll have to report it's been a loss audit, etc. Partner workload, how many staff report to a partner? Is he capable in a firm of managing that many people? Manager workload, a whole host of things are coming up. It's coming up through AQMM in a way also. And, quality review hours, etc. So when we talk of the future, and I will stop sharing here. When we talk of the future, what really is the concern? Your work may become so challenging that you may not be able to do it. You will need help. You will need technology. You may need to make investments. You will want others to come in. You may say these parts of the work I will need to involve X, Y, Z. If he is coming in, then is it a CA firm at all? You are just giving an opinion as an entity. Then, as I told you, other things may come in. And if it becomes too onerous or risky and you don't get compensated, why will you be in that work? Humko nahi rehna hai usme. I don't want. It's too risky. That is the fear. I am myself feeling that fear. So if I am feeling that fear, I can see practitioners who may not be of that size, they will be subject to NFRA someday. Because they do one listed company or one joint C&AG audit, which could be a listed entity jointly also, will get picked up. Then they will be subject to that same intensity, same reporting. And for what? For what fee? So finally, when problem happens, you'll find that your fee is 1 lakh, but you have had to spend on lawyers and others tens of lakhs fighting the battle, apart from the mental trauma you all go through. And not only are these regulators going after partners, earlier Institute would say, who is the member responsible? Now even that trend has changed, right? It is not one member responsible, it's all responsible. Even it started with Satyam. It not one person got penalized by the institute, started with everybody, including the managers on the job. Now, when you do that, the regulator is doing the same thing. So it going down to the lowest level. I know when these failures have happened, CBI have questioned article clerks, impounded their passports. So you are an article trainee, you love to be trained, you're sent on an audit. So in future, an article clerk will come, parents will come to you and say, articles ठीक है, वो तो audit नहीं करेगा. आप tax किस में भी लगाइए, audit नहीं करेगा. Because a poor article clerk has, in one case I know, where an article clerk just photocopied a document because the partner said, get a photocopy done and mail it to me. So article clerk photocopied the document, mailed it to the partner. So when forensic happens, they'll look at all mail trail and finally stumble upon this article clerk as the source of the document. And the grilling happens. And you can get included as accused. Everything can happen. So the thing is, unless our regulatory system and our judicial system and our investigative system appreciates what you do in real time, you see, when you're doing what you do. And I would urge everybody to see that movie. I think that movie is called Scully, I think. It is about the plane which lands on that Hudson River, English movie, beautiful movie. He saved the life of 183 passengers and managed to land it on the river. But he was pulled up, there's a huge investigation which went and said, you have failed in your job. You could have reached the airport. Finally, with simulation, they found that he could have reached the airport. Then later on, They did far more, and he realized that without him, passengers could not have been saved. What he did was right. That's exactly what happens when investigators come in. They use hindsight and not the real time where you are. And imagine if you're an article clerk doing the job. Years later, you'll be called. Years later, you will be called by CBI. Your passport could be impounded. You could be an officer in a company then in some other city. You'll be called. So auditors are being arrested. Auditors are going to jail. Auditors are subject to, regulators will write in flowery English language. Thereafter, it's out in public domain. Your reputation is gone. You may be eventually proved innocent, but your damage is done. That is the scenario I'm painting on the future of the audit. We somehow need to get this balance back to where we are God. And the impact of technology is taking away a lot of our things. Companies, government may come up and say, companies below a certain size, no audit is required. Fine. Do it voluntary. How many clients will then come? They're voluntary. So I'm not trying to scare you all, but I'm trying to paint a picture where you read the tea leaves looking at various trends and put together the trends. If all those forces happen, then what is the scenario? We need to see that big picture and be prepared. We can't live in 1949 saying we are partners in nation building, we are a glorious institute. All that is fine. I did great work, but I'm worried now. I am personally a worried person. Thankfully, I'm not in practice, but I'm worried about the profession. I'm worried about auditors because your signature is on them. And I'm seeing people leaving the profession. In the firm, I said, audit nahi karna hai. I will do assurance, meaning I will provide advice. Accounting standard advice karega, ye karega, wo karega. Bahut kuch. This is too much of a risk for me to do. And it doesn't matter whether I'm partner. If I'm in the team, I'm as much now at risk as much as a partner. Earlier days, only partner was at risk. Now it doesn't matter. Even a person who's doing quality review is now being suspended, or action has been penalized, fined by NFRA. And because NFRA believes quality review can't be a checklist. Right? You're doing a check. Anyway, there are different views for and against. I don't want to. But all I want to say is there are the expectation burden, there is a technology burden, there is a regulatory burden, there is an investigative burden. Then there is a judicial burden, which is law cases take time to get on. And power being taken away from the institute, people who could understand what a profession does. All this, you add the pieces together and see what the picture looks like. Does it look like a beautiful dance person, or a handsome or a beautiful person, or does it look like a Rakshas? The scenario, you look at it and tell me. I'll pause here. Any questions? Or if you disagree with me, tell me.
No, sir, not disagree. Let me share with you, sir. In the month of January, in this year only, I went to one of the PSU big bank because they were not using our software for appointment of branch statutory auditors. I went to the CFO. CFO is all the banks, CFOs are chartered accountants. I was with him for more than 2 hours. More than 3-4 times, he took only for one thing. Mr. Sharma, you have come to me. You tell me, I have invested around 3 crore rupees in TADA and more than 5 crore rupees in giving fees to my branch auditors. And the auditors are somewhere around more than 1,800. So he said, you give me the name of any firms, 10 firms, which you will agree with me that there are the quality which we require. Although I gave all the reasons and everything, but the question was the public perception, sir. If our few auditors or few members don't perform properly, it gives us a very bad effect. One of the, like technology-wise, you are very correct, sir. Within 6 months, we will be on 5G technology. And the moment 5G technology will come, like we are auditor of one of the Manav-Ratna company. Presently, we are 7 auditors over there. And they are prepared now that the way we will be completing our period, they will not have more than 2 auditors. Because now the things have changed. Conceptually, technology they have. Previously, we used to go to their units. Now they have made the group of those units. And slowly, within more than 3 years, they will be having not more than 2 auditors. So we have to accept those technology changes At the same time, all the regulators are coming out with every day new regulations, new circulars, new conceptually different this thing. The things are very different now. Survival of the fittest is very strongly applicable.
As I said, the purpose of audit is also changing in terms of what an auditor should do.
Yes, IBA, Indian Banking Association, that makes a panel of auditors. I cannot say that it's auditor, but because that panel is not exclusively for the CA firms only. That panel is for ASM. ASM is Agency for Special Monetary Group. And all those accounts which are having more than 250 crore exposure in any bank, they are supposed to get regular audit from those agencies. So in there, they are not saying that that panel is only for the chartered accountant firms only. They have taken the other firms also who are not exactly CA firms. So competition, we can see that what is the future of.
Correct.
So, sir, we have one question. One hand is raised by Mr. C.A. Pradeep Jain. Pradeep, sir, if you request, if you can unmute and ask your question. Hello.
Yes, बोलिए प्रदीप जी.
हाँ सर, नमस्ते.
Namaste, Pradeep.
हाँ, नमस्ते सर.
Namaste, Pradeep ji.
Sir, I am not so much fluent in English speaking, but I will try.
आप इंग्लिश में बोल सकते हैं.
Let me understand Hindi. I can understand Hindi.
ओके सर. सर, मैं ये पूरा जो मैंने स्टडी सर्किल जो मीटिंग है मैंने पूरा ज्वाइन किया और आपकी जो भावना है, जो चीज़ आपने ब्रीफ की, वो मैं जो समझ पाया, उसका अल्टीमेट यही है कि हमको ऑडिट क्वालिटी वगैरह मेंटेन करना है, उसको बढ़ाना है या जो भी है. लेकिन चूंकि आप काउंसिल मेंबर भी रह चुके हैं और भाई साहब प्रकाश जी भी काउंसिल मेंबर है प्रेजेंट में, तो मेरा क्वेश्चन सिर्फ इतना सा है कि जब तक इंडिपेंडेंस नहीं होगी तब तक क्वालिटी कैसे मेंटेन होगी या डेवलप होगी. नंबर 1. नंबर 2, जहां तक सवाल है कि इन्वेस्टर्स के रिलायंस का, कि वो ऑडिटेड डॉक्यूमेंट्स पे अकाउंटेड जो चार्टर्ड अकाउंटेंट्स ने साइन करके जारी किए हुए हैं डॉक्यूमेंट्स पे जनरली रिलाई नहीं कर रहे हैं. तो उसका सबसे बड़ा रीजन ये है कि आप जैसे फाइनेंशियल मार्केट में भी देखें कि फाइनेंशियल मार्केट में जो कंपनीज के जो फाइनेंशियल डाटाज हैं वो कुछ अलग बात कहते हैं. दूसरा क्या है कि एक साल में तो वो बता रहे हैं कि साहब 10,000 करोड़ रुपए का उनका रिजर्व सरप्लस है और फिर वो फर्दर आगे 2-3-4 साल के अंदर ही पूरा खत्म हो जाता है, वाइप आउट हो जाता है. तो ऐसी क्या सिचुएशन आ जाती है कि हम लोग उन चीज़ों को एज ए गोइंग कंसर्न या किसी भी रूप में उन चीज़ों को अपन आइडेंटिफाई नहीं कर पाते हैं या उसको डिस्क्लोज नहीं कर पाते हैं. तो ये इंस्टीट्यूट लेवल पे मेरे ख्याल से एक, जब तक इन चीज़ों को हम विचार नहीं करेंगे तब तक ये मीटिंग्स वगैरह करने से मेरे ख्याल से इतना कोई बेनिफिट होने वाला नहीं है. आप बताएं सर.
ठीक है, पहले मैं ये कहना चाहता हूँ, मैं कभी सेंट्रल काउंसिल में नहीं था. सो आई हैव नेवर बीन अ सेंट्रल काउंसिल मेंबर. सेंट्रल रीजनल ब्रांच किसी में नहीं था. शायद मेरे को कोई वोट नहीं देगा, इसलिए मैं भी आई डिडंट स्टैंड, बट वो छोड़ दीजिए. बट लेट मी डील विद 2 सिचुएशंस. एक तो आप इंडिपेंडेंस का बताया. मेरे ख्याल ये है कि फर्स्ट ऑफ ऑल, आर यू टेलिंग मी दैट अ मेंबर ऑफ द इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट्स, his behavior will change depending on who appoints him? I think fundamentally that is flawed. ये बोलेंगे कि नहीं, अगर RBI अपॉइंट करेगा तो you will perform better instead of bank. The simple question is, you are a member of the institute, you are supposed to be a professional. Why should your behavior change? If suppose, let's take an example of a driver. Your driver is always appointed by the owner of the car. ठीक है, मेरा ड्राइवर है. अगर वो बोलेगा आप रॉन्ग साइड में जाइए, रेड लाइट के थ्रू जाइए, इफ यू आर अ ड्राइवर हु वैल्यूज योर लाइफ एंड योर फ्यूचर, यू विल, वो नौकरी छोड़ देगा, बट यू विल नॉट डू दैट थिंग. सो देयर इज अ बिट ऑफ रिस्पॉन्सिबिलिटी ऑन अस टू. आप इंडिपेंडेंस जितना भी बोलेंगे, देयर इज ए डिफरेंस बिटवीन इंडिपेंडेंस इन फॉर्म एंड इंटेलेक्चुअल इंडिपेंडेंस. अप टू अ सर्टेन लेवल you cannot do that. You know, I had been to a training program long ago. There was a foreign trainer. वो बोला है सब लोग का, हर एक आदमी का एक लिमिट होता है. Supposing I tell you ये काम कीजिए for a certain amount, you may do that because the risk is not much. But if I tell you, मैं आपको 10 crore दूंगा, आप इसका मर्डर कीजिए, आप करेंगे? नहीं करेंगे. Because there is not only the risk, there is also a moral element for you, which you will consider. So independence has a completely different issue. Then आपने ये जो financial markets and all of this expectation, you talked about institute doing all this. हाँ, मैं मानता हूँ कि the expectations are changing. आप जितना भी dialogue करेंगे, हम लोग, if we are going to go back and say ये नहीं होगा, ये हमारा काम नहीं है, somebody else will do it. You have two choices, either to meet the expectation or to walk away from that expectation and somebody else will provide. That is fundamentally true, but uska to charcha karna correct hai. Institute has to really think of all what I said now, and Prakash ji is here. He will push the institute to really introspect and see ki future kya hai. That is why I always believe the profession should look at the future very seriously. True. Forget about self-interest there. As collectively as a profession, kya ho raha hai? Not that ye section of the profession ko hum log aisa deal karenge. It is not about that. And increasingly, one point I did not make is because that it was not part of the subject of profession, but future of the profession mein, the more and more you go and seek statutory work, you will disappear as a profession, because the future will be purely based on choice. आप कैसे बोल सकेंगे सबको आपको टैक्सी में ही जाना है? अरे पहले जमाने में, when I used to go a few years ago, केरला में आप लैंड करेंगे कोचिन एयरपोर्ट में, you have to use the coolie, you can't use the trolley. वो मार्क्सिज्म रूल था. But अभी it's a matter of choice, because and you're not expected to carry your own bag. वो बोला you will not allow. वो कूली का यूनियन का आदमी आ जाएगा आपके पास, जैसा आप प्लेन से उतरेंगे आ जाएगा, बोला नहीं साहब आपको कूली को लेना ही है, देना ही है, वो हमारा यहाँ का कानून है, उनको भी नौकरी चाहिए. So you can't go on the basis of quota system and demand work. आपका सर्विस क्वालिटी जो होना चाहिए, which should meet the need of that person.
That's very important. That's true.
I hope I have answered his question. Otherwise,
yes,
Prakash,
yes, sir. Yes, sir. Yes, sir.
There is one more question, sir. Vikas, you can unmute yourself.
Good evening, sir. I am Vikas Gupta from Jaipur.
Yes, Vikas.
My question is, in the past 2 years back also and recently, the Prime Minister, what he has said, in addition to Big Four, he wants certain firms to be
correct.
Big firm should be there, Indian firm should be there. Now, since I had the experience of have a quality review of Deloitte some years back, and I met you also, so I found a lot of difference in the way the softwares and other things are being used by these Big Fours. So, what is your view about these big firms in India? In addition, to Big Four?
First, let me express a view which I'm very clear in my mind on. Big doesn't necessarily mean quality. You can be small and be quality. You can be big and not have quality. Okay. Second is no firm becomes big overnight. Even a company like a firm like Deloitte has been 175 years old. ये आज का नहीं है, it is not yesterday's or today's, across the world. Third, firms become big organically will take decades. It will be through mergers. You join, and why do you do that? Because there is a certain skill set you don't have, somebody has. You join with that person. You are not operating in a certain geography, but you see a market in the geography, so you join with that. That person has some clients which are very good clients and very complementary to your this thing, you join. So together means more. There are many other reasons why mergers of firms happen. But the failure has been converting from, and in my view, there are 4 stages in developing. You start as a sole practitioner. Then you bring your family members in. Father will bring son, mera beta, beti, and all that becomes partner. It becomes a partnership of family. And that's where the family name, because they want to retain succession, everything. Third is then they convert that family business into a partnership firm with outsiders coming in. But the fourth is the most difficult one, is converting a firm to an institution. When a firm is an institution, though the family name may be there, the family member may not be the person running that firm, may not be the person who's managing that firm. That is the most difficult thing. Otherwise, everybody, father would like to have his son finally as the managing partner. So the key to growth in many of these, one of the many elements, one of the elements is, are you willing to take somebody in and pay that person more than what you are getting? Because that person will enhance growth. Our mindset is, ये मेरा company है, मैं 50 साल से मैं चला रहा हूँ. अब how can it is, I have built up, how can I pay him more than what I have done? And I will pay my son more, but not pay him more. Then you have mental block. And then you don't want to give up your family name. So that, to grow into a large firm, it's good to say we need to have more Indian firms. Now what has happened? Even in Indian businesses, it is the same thing. Foreigners have come in and there it is, foreigners have acquired the business. Here, the Indian firms have got a foreign name. But all are Indians, they are being paid well, they are getting good clients, they are able to serve, they have got their independence, they have the benefit of foreign know-how, etc., which they didn't. And investment somebody is making, they are benefiting by paying a certain license fee. There's no crime in that. But yes, we would like an Indian name to be global. We would like an Indian name to be big and compete with, like a Tata competes with a foreign company in foreign brands in India, like a Tata Motors competes with foreign cars in India. We will need that. Ideally, you should be able to make it. It is not, and just like how Jio has been able to demolish Vodafone in India. And Vodafone had to join with Idea Cellular and merge. Why did they merge? Because you're feeling a threat. So this mindset of willing to change, every change requires sacrifice, some compromises. And what we do as a professional body also, we can't make rules to encourage these restrictive practices. We should say, fine, in the process of opening up, when India opened up, many companies went bust. But India went up, right? Whatever it is. And now we talk of Atmanirbhar, fine. After the example I give, sorry, I'll take 2 minutes. But the example I give, and I give this to the government also, I said, for those who understand cricket and have played cricket, today Indian cricket team in 2020 or one-day internationals or test is one of the most feared teams. Actually, it's number one in many of those tables. How did it happen? In the 70s, I have seen when a foreign team used to come, West Indies team or England team, the fast bowlers, Indian batsmen would tremble and they would run away. And India would always win in India because they'll make a spinning wicket. You have Prasanna, Bedi, Chandrasekhar who will run through the side. When India goes outside, complete loss. Then what did India do? How did India become world class? They said to become world class, we have to open up. We get foreign coaches to India. Dennis Lilly Foundation, MRF Foundation, whatever it is, they came, MRF Fund. Dennis Lilly started coaching Indians to bowl fast. That is not enough. They said we need Indian pitches to be the same like foreign pitches. Let us make fast wickets. So many fast bowlers now got developed because earlier fast bowler, you want to be also pitches slow. It's made for spinner. So you said it's better to be spinner. So you made fast pitches. Then they said that is not enough. We should have tournaments where Indian player and foreign players are playing side by side. So IPL came in. In IPL, whether it is Mumbai Indians or any other, foreign players, Indian players that were playing together against another foreign. And so you are seeing them close. And as friends, they share with you. Then when you go out as an Indian team, you are equal standard as them. That is how it has happened. Same in the profession. If we say don't open up, don't allow this, don't allow that, don't create a work field where all can learn and play and face. When initially we did in India, yeah, we had foreign bowlers bowling on fast pitches in India, we had trouble. But we also developed fast bowlers simultaneously. It's a journey. And today India is able to sit comfortably, taken some decades. This is the message for me, for the profession. Think differently.
True. Very true, sir.
Absolutely, sir. Very, very fantastic explanation, to be very honest. Like, I've never heard such sort of explanation from anyone. Thank you, sir.
Most welcome.
I'm but conscious of time, sir. We are already at 7:12 p.m. So I don't see any question. Pulak sir, I can see video on. In case if you have any question, quickly you can unmute yourself, and I request this will be the last question. Otherwise, we are good to conclude our today's session. Yeah. Okay. So, sir, there is no question.
Thank you.
I can see one hand. Because, sir, yeah. Because, sir, you can unmute and quickly ask your question.
Sir, last one question. Day before, there was one notification which allowed the multidisciplinary partnership of various other professionals. What is your view? Multidisciplinary.
So you mean that Form 18 changes, eh?
Yeah.
Yes.
Well, I've always said that multidisciplinary firms will be the future. All I'm saying is my message is even more different. It may not be liked. I said, today, if you ask me, the firm which I retired from, is it a CA firm? The answer is no. It's not a CA firm. You have everybody there. I have an ex-CBI person is there. I have engineers there. I have my hardcore management consultants, how many CAs also is there? So the nature of organization has changed. Multi-technology specialists are there who are not CA. They will know technology very well. So I'm saying the character of a firm will undergo change. And in future, the challenge for us in future will be whether we can call ourselves as a CA firm and have only CAs as partners and members. Even that, as I gave you an extreme view, you'll have for investors coming in. Private equity investment, humko 100 crore chahiye. I want to make. Fine, he will get his return if I grow. No? He's not going to come and do audit. And so he's not going to control you in any way. You audit, you're accountable. You're a chartered accountant, you're accountable. How does it matter who owns the firm? So long as he's bringing in. I'm just raising a question for consideration. But we have been brought up in a 49 Act. It takes us time for us to change mentally also. But not easy. But this is the trend. I always say observe trends. If you can be ahead of the trend, you are lucky. If you can be along with the trend, you are also lucky. If you are behind the trend but able to catch up, you are lucky. But if you're behind the trend and not even aware of it, then God bless you.
So the issue is that most of the members are not even knowing this, right? See now, Vikas, sir, let me just mention about Vikas ji. He is the senior partner of my parent company, Kalanin company. That is the biggest company of Rajasthan, doing fantastic work in audit and particularly taxation sides. Very ethical people, very genuinely people. The thing is, sir, now, if you want to do any forensic audit, like in all insolvency matters, you have to go for a forensic audit. And I am very much sure that only chartered accountant cannot perform that audit. Even this ASM audits, even in the empanelment, they ask what softwares you are using, what tools you are using, what different forensic audits you have done. So we have to accept those things which are getting changed. I was just talking to you, I was requesting that in the month or end of March, there was a question about this accounting software. All those things, sir, I don't think a person who is having knowledge only of chartered accountant is will be able to perform this type of audits. That's a serious change.
Absolutely.
And because you had been with me with NTPC, now NTPC now presently there are 7 auditors. Now they have said within 2 years we will have not more than 4 auditors, and even after 5 years we'll have only 2 auditors. So there were technology is taking place. We have a simple any other option that we'll have to understand that technology, and we have to perform. We have to catch that technology and perform. That's the only solution with us.
Correct.
Absolutely.
Thank you very
but
much.
at the same time, you must all remember that finally the thing is about each one's individual aspirations. If I'm happy being in only a particular geography, serving a certain set of clients and all that, jaisa kirana store hota hai. He is happy selling nearby. At one time, kirana store used to give credit. He would understand your needs, supply home. He would say, "Nahi, nahi." When I was a young boy, I would go to the shop and say, "I want this brand of matches." He'd say, "Nahi, nahi, wo brand nahi leta hai tumhare mummy. Yehi brand leti hai." And he would give. So then he knew your needs. He would provide credit. He would keep account, come at the beginning of the month. Today, departmental stores everywhere, poor man is losing his relevance. But in the Corona time, maybe he's becoming more easy because you are not in an enclosed space, you are going to him. But that apart, he is satisfied with what he has got. So I'm not saying this is good or this is bad, but there is an impact on everybody. You have to say, I'm okay with this impact or I'm not okay with this impact. And death is always very slow. The big ones or the medium ones, slowly those companies will fold up because of the change and technology. The only place where you see typewriters, thoda high court ke bahar kuch log baithte hain typing mein se, aur ribbon bhi bikta hai, typing ka ribbon. But where else? Kahan hai? So if you're a typewriter manufacturing company, you can't say, "Main 100 saal ka company hai, purana." वो जमाना गया. So it's a question of being satisfied with what. Same with schools, educational institutions. So it's it's not CA profession alone, please remember. Even look at how Byju's and others have transformed education. What happened to tuition teachers? Earlier you used to send your children for tuition. Abhi wo ghar mein baithe any time, midnight mein usko doubt hai, online ko jata hai, or even talk to somebody midnight, overseas mein baitha rahega, you'll get an answer. They don't need to go for tuitions. That's why Byju's has become so these are the things which we have to understand. Everybody is threatened. And education system is also, there will be dramatic change. You wait and see the way it has already happened.
I remember, sir, your statement that you were mentioning the other day, that previously we used to call that person who was most intelligent, who used to read and reproduce it. But now the concept is different. Now every information we are having. Now correct. How to use that information.
Exactly. And the problem, unfortunately, Sharma ji, is our own institute. We still hold exams to test recall of knowledge. Write short notes on this. Arey yaar, real life mein to I look at Google, I look at this. Test application of knowledge.
True. Very
true. If you're testing application of knowledge, I can sit at home also. I can appear. I don't need a fixed date for exams. Like, entrance to BITS Pilani or something. It is not on a single day. It is over a series of days. You pick your date, time, whatever it is you write. And after a month or something, after everybody has done, they will say, okay, you got admission, not admission. Or even when you write, you know what your marks are. True. Instant. Then array 300 mark aaya, mere ko BITS Pilani mein nahi milega. So you start planning for Vellore Institute of Technology or something. Whereas we want the same traditional exam paper setting, then the question, test, recall of knowledge. Recall of knowledge is useless.
Yes, sir.
So true. We need that reform.
Very true, sir.
And then coaching institutes will have to transform if you're testing application of knowledge. They won't be able to give out notes, words and all. You will have to understand and solve. Case study based hoga.
True.
You study the foreign institutions, ACCA. ACCA kyun? ICMA, Cost and Management Accountants, England and Wales. They have all case study based exams. They have 2 sets of exams. And not easy then.
Yep. So we don't have any further questions, any further hand raised.
I think thank you for all.
Thank you, sir. We are really grateful to you, sir. We will be, sir. अभी बहुत जल्दी सर आपका एक सेशन हम और अब पूरे बड़े प्लेटफॉर्म पे लेके आना चाहेंगे सर अब से
अरे
टाइम
जो भी आप बोलेंगे मैं बोला I would have even more retired by then.
थैंक यू
And will sir, I will take
Okay.
and I will take a chance there also to be moderator
Sure.
for that section.
Sure,
Thank you,
Sunil.
sir. Thanks a lot.
Right.
It is one of the best session I ever had, sir. Thanks for
That's so nice of you.
thanks for sharing knowledge with us.
Most welcome. Can I log off or is there any
yes
other?
sir. Yes sir, you can
Right.
log
Thank
off
you,
sir.
sir.
Right. Bye.
Thank you.
Have a nice weekend, sir.
Bye. You too.
Thank you all. Thank you all. In case if you have any query questions, you can reach out to me. I will try to share my knowledge, try to resolve your.
Thank you,
queries.
Sunil. Thank you. Thanks a
Thank
lot
you,
for
sir.
spending your
Thanks a
time.
lot. Have a nice weekend all. Thank you.